This video shows you how to use Datamaker, which is part of the eVal. It's a companion to the eVal Excel overlay. I'm going to open that. It opens on my other screen. I'll bring it over here. And we're going to use this Datamaker application to go out to Wharton Words, which is a data warehouse that we have a subscription to as part of at WSU. We're going to use the Words data, and that's going to call up the Words website. And you can see that I'm already logged in. You will have to log in to do this. This allows us, with some modification, it's not perfect. You'll want to check it. It allows us to focus on the data and not on collecting the data. All of this data is available public domain, but by having Words, we can do it relatively straightforward and spend a little bit less time collecting data and a little bit more time analyzing the data, which is the purpose of this course. So I'm going to type in here IBM because I know that's the company that I want to look at. And I'll go down here and submit query. And this allows us to, and you can see it's being processed. It'll take just a couple seconds. And now it's done. I'm going to click on that. I'm going to save it, but I'll save it as IBM. It already knows I've done this before. I will replace that and then open it. And again, it opens on my other screen. Yeah, okay. I just wanted to check, make sure we're recording this monitor. Now, let me blow this up because it's a little bit hard to see. Let me use 125% here. And there's a couple of modifications that need to be made. First off, this column here, right between in rows 1 through 5, is now extra. We need to delete that. And we're going to shift it left. Don't worry that it's hard to read now. Take out these 2 rows, delete. And then we're going to take all of this down to row 400. It's too far. Okay, down to 400. And copy that. And now we're going to go back to this Datamaker software here. We're going to look at this tab that says Convert Words Output. And we're going to go here on this highlighted blue cell and paste that. And as a result, you should see that the company's name and ticker symbol is shown right here. Just want to do a little bit of checking of this data, and it requires some of that because it doesn't quite work out. Let's check it, and now I'm going to blow this up a little bit because it is too small. Let's see if I can do it like that. It might be too big, but let's try it. See how this looks. The fiscal year ending is all on December 31st. It says fiscal year end date. I guess that's just giving you the year. I don't know what that's saying. Now let's take a look line by line and make sure. So the income statement is shown before, but so what we want to do is make sure that cash looks all right. 11 million, or I guess that's 11 billion. These are all in thousands over here. Receivables, 31,832. Inventories, 2103. Current assets, 7011. For a total current assets, 49,422,000,000. Property, plant, and equipment, we're just taking the net and putting it in here. That's all that eVal wants. Investments, they want the total of these two, which if you look at it is 12,212,000. Intangibles, 33,659, and then other assets, and they have included deferred charges and other assets from words into this number here. So you can see that that totals up, and our total assets 117,532. So assets look okay. Now let's take a look on the right-hand side of the balance sheet. I tend to find more problems over here on the right-hand side. I don't know why. So if we look at accounts payable, and first off, I guess they're looking for current debt. And that's going to be the 4,601,000. You can check back, it works out the same. Then accounts payable, 7,994,000, and you can see that that's the total of those two. Let's highlight these to make sure that we get everything included here. The first line was the 4,601,000. I'll highlight that. And then income taxes payable, that's the 5,084. And other current liabilities, 21,921. That's this one here. So that all adds up to 39,600, and we've got that. Then long-term debt, they do have plenty of long-term debt, but it's in the wrong row. So what I'm going to do is put it in the right row. We can mess these things up. Okay. And so long-term debt is 21,846, and then we want to copy that over here. And that getting over to 35,074. Now, so that takes care of that one. Let's get the deferred. Now we have other liabilities. And we have deferred taxes. So let's do the other liabilities first. It's going to be equal to this number times 1,000. That's the 27,494. And the deferred taxes is going to be equal to 378 times 1,000. And then I'm going to take both of these and copy and paste them over here. And then we want to check to make sure that the total liabilities add up all the way across, and I think they do, comparing with this line right here. Now, stockholders' equity section is even further screwed up. That what they call an eVal minority interest for political reasons have been changed to non-controlling interest. It's just a political correctness thing. So we're going to take this equals this number times 1,000. And we want preferred stock. We've got no preferred stock, so we don't have to worry about that. We do have paid-in capital. Now, paid-in capital is the sum, and I'm going to open parentheses, of the common stock and the capital surplus, and we're going to subtract the treasury stock, which is shown as a positive number. So I'm going to use a negative number there for the treasury stock. And then I'm going to close paren times 1,000. And then the retained earnings is going to be equal to C59 times 1,000. So I'm going to come down here. All four of those lines, I'll copy and paste them over here. Now we can see that total liabilities and stockholders' equity, these all work out the same. The 117,532 is right there. They all balance. The balance sheet looks okay. Now, how are we going to do this income statement thing? That's going to be a little bit tricky. Let me see if we can divide this screen up this way, and then also this way, income statement, and over here, income statement. Looks like the sales is okay. Let's just drop down to EBITDA. Looks like 23,577. EBIT is 8 earnings after depreciation. Net income 14,830. It looks like that's working out okay. Let's go back and just check it out just to make sure. For example, we see cost of goods sold 48,472. That's that. Gross profit looks okay. SG&A 22. Now, here, I think because we end up with the right net income, I think I'm going to, so if we look here, R&D comes from C407 toward the very bottom. Let's go down and just take a look at R&D, C407. And that's just a separate line shown down here at the very bottom. So what we've done is we've broken out SG&A out of R&D out of SG&A. The total net income remains the same. Now, let's go back up over here. This is coming, all right. And I think most of those are going to be okay. Let's go back. I had a little bit of trouble navigating these split screens. Okay, so here's our income statement down here in the bottom left. And we see the 23, I can get down to this number, the 23,577. The depreciation and amortization, 4831. Income after depreciation is 18,746. That's this number. Interest expense, 928 there. The non-operating income, 1,896, which is going to be the same. They've come. eVal has included special items with non-operating income, and that gets us down to earnings before taxes of 19,714. We put the income taxes 4890. That's this one. The minority interest is going to be a minus 9,000. Which they come up with here as K28 in 19,714 minus this plus 9,000. Yeah, so so this is a subtraction. Income taxes are a subtraction, And minority interest is actually an increase, even though it's shown here as a negative, getting us down to 14,833. And I think they just do that for consistency with that. These are subtractions, and it turns out to be a negative number, so it's in addition. So we end up with net income 14,833,000,000, and that looks pretty good. Now let's come back over here. We've done the balance sheet already. Now let's look and see what's going on in the statement of retained earnings. From the balance sheet, we had beginning shareholder retained earnings. That's here, beginning balance of retained earnings. Where did they get to 73,789? Oh. So we have 2011, but we don't have 2010 for this purpose, for the retained earnings. The ending balance becomes the beginning of 2010, becomes the beginning balance for 2011. We add the net income, which is from up above, L35, subtract the dividends, which is D118, that's these cash dividends. Oh, it's for the next year, sorry. Dividends, 3,473. And then this is primarily going to be your changes in other comprehensive income, accumulated other comprehensive income. That's these foreign currency translation. They don't really care so much about that. They just want to put it in there so that it balances from one year to the next. Now, the one thing that's missing so far is the common shares in thousands at year end. And so at most recent fiscal year end. What we want to do is get those common shares in there. And here is the common shares that we want. I'm going to close this, and these are going to be in millions. I think that's going to be the right denomination, and I'm not positive. So that's line 110. Let's come up over here. So in thousands at most recent fiscal year end. So that's going to be equal to G112 times 1,000. Why doesn't that work? And that line has changed. It's now G110 times 1,000. Most recent year end, G110 times 1,000. So let's go up here. And we'll just change the formula because I think that's right there. Now, do we want, let's see if those dates, the fiscal year end date, if we put that in there, is this. Like that. And maybe we can come up with, during this class, we can come up with a revision so that we can make this more streamlined. I think that would make it a lot of sense. But I think right now what we have is something that's pretty good as far as filling out the Datamaker. There's one more change that needs to be made in Datamaker. That's where we're working, and it's going to be here because this data here needs to be in the format of year dash month dash DD. And so this is going to be 2010 dash 12 dash 31. You see that it's linked over here and it shows up just like that. And that, I believe, is the correct way that we want it to show. So we need to, it shows up here as December 10, but we want to do that with each one of these. In fact, I'm going to copy and paste these like this. And that's all 2010, but then we can just modify the last number. So these are all now correct, and that's that. I believe that finishes our Datamaker work. The final part of using Datamaker to input to eVal is to take this block of data that's in orange or burnt orange over here in columns R through V. And we're going to highlight that, and we're going to copy and paste it into eVal. And so I have eVal open over here, and it currently has cols because I think that was the default for. Now it's tempting to just paste it, but if you paste it, you get all of these errors. Let me show you. If I just paste that, you get all these references because these are all references. So what you really want to do is paste values only, or paste special. So you can use this if you have that, but you just want the values. And when you do the values, then that populates the rest of eVal, and everything looks beautiful. And there we have the end result of taking data from CompuStat on words, inputting it through Datamaker, and bringing it into eVal. And it may seem like a cumbersome process, but it was really rather short compared to how tough it could have been. Yeah, so there we have it.